trailing 12-month revenue. They're saying LTM in their S1 is the document you file when you're growing pod. Their LTM or trailing 12-month revenue is 487 million, which is 33% year over year revenue. Companies that grow over 20% are considered high growth in the public markets. In the private markets, maybe not so much. And in this case, this means Warby Parker's revenue from June 2020 to June 2021, basically $500 million. So in our industry, you'll hear the term annual reoccurring revenue, AR. That's typically for SaaS businesses. That means the revenue is guaranteed to keep going. That doesn't apply when you're selling glasses. It's not like people are having a subscription to glasses. And maybe they do have a subscription process, in which case they could say annual reoccurring revenue. LTM is the last 12 months, and people could say trailing 12 months. So that just gives you an idea of what, is actually going on with the business. A little more, I would say, honest, intellectually honest. So when I meet with founders, I just always ask them the same thing. What are the last 3 months? And then I'll put in parentheses, 3 numbers, just so we're clear. I'm not looking for one number. I'm not looking for 3 paragraphs. I'm not looking for disclaimers. And man, my job is maddening sometimes. I will ask a founder for the last 3 months revenue, and they will start talking for 10 minutes, and I still don't have the numbers. It is bonkers. If you are working with investors or potential investors and they ask you a really simple question, give them the answer because they probably have a follow-up question. And the follow-up question might be really good for you to give. So the first half of 2021 puts them at a $540 million run rate. They did $270 million. That's pretty great. They claim to have a 60% gross margin. That's nice. They operate 145 stores and claim to have over 2 million active customers. Not sure how they define active customers. We talked about that on previous episodes. What's an active customer? For me, an active customer would be somebody who made a purchase in the last 12 months, like a fair one to me, because they might come back. We talked about Nextdoor saying people who open an email were active users. This is one of those things, if you're going to be a public market investor, you're going to want to really drill into. Oh, actually, my researchers just told me active customers are unique customers that have made at least one purchase of any product or service in the preceding 12 months. I had literally guessed it. That's good. In 2019, Warby Parker essentially broke even. In 2020, they lost about 56 million, which is nothing. Losing a little bit of money while you're growing a business is called investing in the business. In 2021, they're on pace to lose about 14.5 million. So they're decreasing the loss or they're investing less. There'd be 2 different ways to look at it, depending on if you're a growth investor or you want to see profits. One of the most money-losing / break-even businesses of all time was Amazon. And now they've turned on the profitability just by turning a dial. They can just decide how much money they want to make by increasing the cost of Amazon Prime. I don't know if Warby Parker has that ability. I don't know what percentage of market share they have. If they made every pair of glasses $25 more and increase their profitability, would they lose customers? Would people push out buying new glasses? E-commerce is hard. All right, so just taking a pause here. I have invested in D2C companies before. Most of the time, we say no to these companies, 99 times out of 100. And a lot of investors hate this specific sector. Why do they hate it? It's because if you're Warby Parker and you're one of the greatest D2C companies of all time, along with Dollar Shave Club and many others, direct-to-consumer is low margin and hard to scale. And if they're only making 30% year-over-year growth, right, at Warby Parker, and they're making 9 figures, let's compare that to a software business like Twilio. Well, Twilio has a $2.4 billion 2021 run rate. That's up 65% year over year. And they're at a $63 billion market cap. And Twilio has 2 times Warby Parker's growth rate with 4 times the revenue. Why is this? One of them selling software. One of them is consumption-based, right? And the other one is selling physical product. Selling physical product, hard to scale. Warby Parker is also not a marketplace. If it was a marketplace and you had a bunch of sellers on one side and you had a bunch of buyers and Warby Parker was managing that and taking a percentage of the sales, like eBay does or Uber does or any number, Airbnb of marketplaces, that might be higher scale. That might be more interesting. So investors love software and marketplaces. They love consumer subscriptions. They love fintech. They hate direct to consumer. It's a really hard business. You need to have a very unique product, say 8 Sleep, which is a direct to consumer business we've invested in, or Terra Cafe, which is a very unique direct to consumer business in my mind. And I don't mind investing in them, but I do, when I look at those businesses, look at them differently than consumer subscription SaaS and marketplaces. Let's take an incredible example. YouTube, $28 billion run rate for 2021, 83% year over year growth. YouTube is not a spring chicken. They have 3 times Warby Parker's growth rate with 50 times their revenue. So take a pause and ask yourself, if you're placing a bet, are you going to place a bet on Warby Parker? Yeah, I wouldn't. It doesn't seem like a high growth business to me. And finally, Amazon Web Services, that $56 billion run rate for 2021. What's their growth rate? 30%. In other words, Amazon Web Services with $56 billion in revenue. That is not a small company. That is a huge company. They've got the same growth rate as Warby Parker. Is this the fault of management at Warby Parker? No, it's just the nature of different businesses have different margins and different growth rates. It's very hard for a company that makes a physical product to scale. SaaS software, yeah, that scales. So one final thought here about Warby Parker. CNN business reporter Nathaniel Meyerson dug up a pretty interesting insight from the S1, where they talked about the positive trend and signals for their business. Staring at your computer all day is good for Warby Parker. The rising usage of smartphones, tablets, computers, and other devices has contributed significantly to increased vision correction needs and consistent new customer growth within the eyewear market. In other words, we're all going blind from staring at our smartphones. I know it. I started wearing this past year like readers. If anybody has suggestions for me about how to get my eyesight back, do I have to stop looking at screens? Should I get LASIK? I don't know. I've never had eye problems. I got to figure this out. So you're all going blind and Warby Parker's going to win. Maybe I should invest. Before we get into the ad, let me just tell you straight up, LinkedIn.com/twist, your first job posting free. I'm not kidding. LinkedIn.com/twist, your first job listing free. Nothing to lose. Okay, now on to the ad. Too many small business owners are busier than ever. They spend time searching for and interviewing the wrong candidates for a job opening, and it would be much better for them to spend their time growing their business. That's why LinkedIn Jobs has made it easier to get the candidates worth interviewing faster, and that's why they're giving you the first job listing for free at linkedin.com/twist. They know it's going to work. Here's how it works. You create a free post in minutes on LinkedIn Jobs, and you reach the world's largest professional network with over 750 million people. I remember reading this ad when it was like 150 million. My God, they're growing. It's like one of the biggest growth stories inside of Microsoft, in fact. So they focus on candidates with the skills and experience that you need, and you can use screening questions to get your role in front of the most qualified people. We love LinkedIn Jobs at launch, and in 2021, we've hired a 3rd producer, a curriculum designer for Foundry University, and 2 more researchers, and we're still hiring for 3 more positions using, you guessed it, LinkedIn Jobs. So LinkedIn Jobs will help you find the candidates that are worth interviewing faster. Every week, nearly 40 million job seekers visit LinkedIn. So post your job for free at linkedin.com/twist. Terms and conditions apply because they're giving you something for free.